We have to raise up the debt ceiling because we're not going to be able to pay our bills if we don't do it by June 1st. Yeah, that's less than 1 month away. That's what U.S. Treasury Secretary Janet Yellen said loud and clear. After the April tax season and gone, and it's clear we didn't intake enough revenue or as much as we were expecting, Yellen's announcement, or warning, depending on how you want to take it, had President Joe Biden reach out to the Republican and Democratic leaders in both the congressional chambers on Monday, and they have a meeting coming up in the next few days. According to White House officials, he personally called House Speaker Kevin McCarthy, Chuck Schumer, Mitch McConnell, and House Minority Leader Hakeem Jeffries, according to a White House official who did not want to be discussed who that was. But there's no indication either side is really willing to do any compromise. The debt ceiling imposes a legal limit on the amount of money the U.S. government can borrow. Right now, that limit is, drumroll, $31 trillion. We're eerily close to it, and that has forced the White House to do special budgetary maneuvers to conserve cash, which is good, and buy time for lawmakers. I wish they would conserve more cash. But conflicts between the Republican and Democrats are intensifying. It is prohibiting any kind of move or progress to happen. On Wednesday, House Republicans passed their proposal to cut federal spending by billions of dollars in exchange for raising the debt ceiling. Of course, it didn't stand a chance with the Democrat-controlled Senate, but they must make a deal now because the U.S. is running out of time to pay the bills it has already racked up. It's dirty and unfortunate. It's Americans that we will continue to suffer because of what's happening. And what happens if the debt ceiling is not raised this time? Back in 2011, Treasury did have a contingency plan in place when we were faced with a similar situation. But we're not sure if they're going to follow that plan. Under the 2011 plan, Treasury would continue to pay interest on those Treasury securities as it comes due. As the securities mature, Treasury would pay the principal by auctioning new securities for the same amount and thus not increasing overall stock of debt held by the public. However, Treasury would delay payments for all other obligations, kick the can down the street, until it has enough cash to pay for its obligations. In other words, it will delay payments to agencies, contractors, Social Security benefits, and Medicare providers rather than attempting to pick and choose which payments to make that are due on a given day. This is not a good path, but it seems to be the only available path if we don't resolve the conflict between these two parties. The worst part of it all is that we, the ordinary investors, can't do anything about it to resolve this. At the end of the day, unfortunately, it's just a catch-22. We need to raise the debt ceiling if we want to continue to pay government workers and contractors and make sure they get paid. And for that to happen, both parties would set aside their politics and make it work. But raising the debt limit, we're back to the same old tricks, putting a Band-Aid on what we really need, which is major surgery, financial security. And we need to cut our expenses. What our economy needs is an overhaul, economic and financial policy overhaul. We need to strengthen our gross domestic product, fix our education system, stop the skyrocketing crime rate, and advance our technologies. It's easier said than done, but if we don't start now, we will fall farther behind. Just remember that the reason we keep you updated on all this, no matter how disheartening the news is to make you realize how important it is to continuously re-examine your investing options. Make sure you're well diversified and make sure you have enough of a hedge. A hedge is an asset that will move against the rest of your traditional investments. When the stock market crashes, the dollar goes down, you want an asset that's going to hold up. Gold has historically done that. Either it'll go up dramatically during this time, or it'll just hold firm and be steady. In fact, in 2022, when all the major assets yielded none, gold held up and was up a little bit in 2022. You may want to know more about gold and silver and other precious metals. We have a free gold and silver investment guide. Yes, it's free. Go to noblegoldinvestments.com. That's noblegoldinvestments.com, or call us if you want to talk to somebody, 877-646-5347.